Picture this. It is a Tuesday morning. Margaret, a 68-year-old retired schoolteacher, sits at her kitchen table with her coffee. She opens her bank account on her tablet, something she does every month, and she stops cold. Her Social Security deposit is lower than usual, not by a few dollars, by hundreds of dollars. She checks again. Same number. Her heart is racing now. She thinks, did I do something wrong? Did they cut my benefits? Is this because of something I heard on the news about Congress changing Social Security? She calls her daughter. Her daughter doesn't know. She searches online. She finds 10 different answers. All of them different. Some scary, some confusing, none of them clear. Margaret spent 28 years as a public school teacher. She paid into her state pension. She did everything right. But nobody ever told her about a rule. A rule that had been quietly reducing her Social Security check for decades. And nobody told her that in January 2025, that rule was finally eliminated, which means Margaret may be owed money right now. Money she has not collected yet. If you are watching this right now, whether you are a retiree, a spouse of a retiree, or someone helping a parent navigate their benefits, I want you to take a breath. You are in the right place. My name is Milena. I am a senior policy analyst and retirement finance expert, and I have spent years helping retirees understand the rules that affect their Social Security, their pensions, and their financial security. Today, I am going to walk you through exactly what is happening right now with Social Security in 2025 and heading into 2026. I am going to tell you what the Senate is actually debating, and more importantly, what has already been signed into law that could change your monthly check starting right now. I am going to separate the facts from the fear. And I am going to give you 3 clear steps you can take this week to protect your benefits. But I need you to stay with me until the end, because I am going to reveal the single most dangerous mistake that retirees are making right now. And it is costing some of them thousands of dollars. Let's get into it. I want to tell you about Robert. Robert is 67 years old. He retired 3 years ago after spending 31 years as a firefighter in Ohio. He was proud of his career. He served his community. He earned his pension. When he retired, he started receiving his state firefighter pension, about $2,100 a month. He also applied for Social Security benefits based on his wife's work record, because his wife Linda had worked in the private sector for over 25 years and paid into Social Security her entire career. But when Robert's spousal benefit came through, it was almost nothing. He was told it had been reduced because of something called the Government Pension Offset, the GPO. Robert had never heard of it. He just accepted the number SSA gave him. He figured, that must be right. The government calculated it. What can I do? So Robert and Linda adjusted their retirement budget. They made it work. It was tight, but they managed. Then, in early 2025, Robert's neighbor, a retired police officer, called him excitedly. Did you hear? They repealed the GPO. They repealed the WEP. There's a new law. We're getting back pay. Robert was confused. He had heard something vague on the news, but he didn't understand if it applied to him. He didn't know who to call. He waited. He thought, SSA will contact me. They'll send a letter. They'll fix it automatically. Weeks passed, then months. Robert assumed no news meant everything was being handled. But here is what Robert didn't know. Some beneficiaries, especially spouses and survivors who were previously denied under the GPO, need to take action themselves. They may need to file or refile an application with SSA. Robert was losing money every single month by waiting. By the time his neighbor finally pushed him to call SSA, Robert had delayed collecting his corrected benefit for several months and had missed out on getting his situation fully resolved as quickly as possible. Robert made a very human mistake. He trusted that the system would find him. But with over 4 million people affected by this new law, the system is overwhelmed. And if you are in Robert's situation, you cannot afford to wait. Here is everything you need to know, straight from the official sources. Let me now give you the facts, real facts. From official government sources only. No rumors, no guessing, no political spin. Let's start at the beginning. What just became law? The Social Security Fairness Act. On January 5, 2025, President Biden signed into law the Social Security Fairness Act. This is Public Law 118.310. This is not a proposal. This is not a rumor. This is signed law. And it makes 2 enormous changes. Change number 1. The windfall elimination provision. Gone. The WEP was a rule that reduced Social Security benefits for workers who also received a pension from a job that did not pay into Social Security. Think about who that affects. Teachers in states like California, Texas, and Massachusetts, police officers and firefighters in states with their own pension systems, federal employees who were hired before 1984, state and local government workers across the country. If you worked in one of those jobs, and you also have some Social Security credits from other work, the WEP was quietly cutting your Social Security check every single month. Approximately 3.2 million Americans were affected by the WEP. As of January 2025, the WEP is eliminated. Change number 2. The government pension offset, gone. The GPO was even harsher in some cases. It reduced or completely eliminated spousal and survivor Social Security benefits for people who received a government pension from a non-covered job. So if you were a spouse or widow of a Social Security recipient, but you also received a government pension, the GPO may have wiped out your spousal or survivor benefit entirely. Approximately 800,000 spouses and survivors were affected by the GPO. As of January 2025, the GPO is also eliminated. And now, the retroactive back pay. Here is where it gets very important. The law requires SSA to pay you retroactive benefits going back to January 2024. That is right, not from the date the law was signed. From January 2024. SSA began issuing these retroactive payments in February 2025. The average retroactive lump sum payment is approximately $6,110 per affected beneficiary, according to SSA's own data. And going forward, affected retirees are seeing an average monthly increase of approximately $360 per month. For affected spouses and survivors, the average monthly increase is approximately $700 per month. These are not small numbers. This is real money that belongs to real people who worked hard their entire lives. Now, what is the Senate debating for 2026? This is where I need to be very careful with you, because there is a lot of noise out there. And I do not want you to make decisions based on noise. Here is the honest truth. There are several proposals being debated in Congress right now. One of them is called the Social Security 2100 Act. It has been proposed by Representative John Larson and has appeared in several versions over the years. As of mid-2025, this bill has not been enacted. It is still in committee debate. It is not law. Some of what this bill proposes includes benefit increases for all Social Security recipients, changing the COLA formula from CPIW to CPIE, which is the Consumer Price Index specifically for the elderly. This would potentially result in higher annual adjustments for retirees, raising the payroll tax cap so that higher earners contribute more to the system. These are proposals. They are being discussed. They may or may not become law. I will keep you updated as things develop. But right now, do not make financial decisions based on proposals that have not passed. What about the 2026 COLA? I know many of you are wondering about next year's cost of living adjustment. Here is the honest answer. The 2026 COLA has not been announced yet. It will be announced in October 2025, as it is every year. For 2025, the COLA was 2.5%. That brought the average monthly retirement benefit to approximately $1,976 per month. Early estimates from nonpartisan analysts suggest the 2026 COLA could fall somewhere between 2.3% and 2.6%. But that is an estimate, not an official number. Anyone telling you the exact 2026 COLA right now is guessing or misleading you. The only official source for COLA announcements is SSA.gov. What about Social Security running out? I hear this fear constantly, and I want to address it directly. The Social Security Board of Trustees publishes an annual report every year. Their 2024 report projects that the Old Age and Survivors Insurance Trust Fund could be depleted by 2033. That sounds terrifying. But let me explain what it actually means. It does not mean Social Security disappears in 2033. It does not mean your checks stop. What it means is this. If Congress takes no action between now and 2033, SSA would only be able to pay approximately 79 cents for every dollar of scheduled benefits. That is because the program would still be collecting payroll taxes from working Americans. It just wouldn't have the trust fund reserves to cover the full amount. Now, and this is important, Congress has fixed this before. In 1983, Social Security faced a nearly identical crisis. Congress acted. The program was saved. Most policy experts believe Congress will act again before 2033. But this is also why the Senate debates matter. The decisions being made now are laying the groundwork for the long-term health of Social Security. Schuth's tax trap most retirees miss. Now I want to talk about something that almost nobody's discussing, and it could be costing retirees real money this tax season. If you received a retroactive lump sum payment from SSA under the new Fairness Act, that payment is potentially taxable income. According to IRS Publication 915, up to 50% of your Social Security benefits may be taxable if your combined income exceeds $25,000 as a single filer, or $32,000 if you are married filing jointly. Up to 85% of your benefits may be taxable if your combined income exceeds $34,000 as a single filer, or $44,000 married filing jointly. Now here is the critical issue. If you received a lump sum of roughly $6,710 in early 2025, that money could push you into a higher tax bracket. It could increase your taxable Social Security income for 2025. And here is something even more dangerous that very few people know about. Medicare bases your Part B and Part D premiums on your income from 2 years prior. So a large lump sum in 2025 could trigger higher Medicare premium surcharges, called IRMAA, in 2027. But here's the good news. The IRS provides a legal protection called the lump sum election method. This allows you to calculate your taxes as if the back pay was received in the year it was originally due, rather than all hitting your 2025 income at once. You can access this through your Form SSA 1099 and IRS Publication 915. And if your Medicare premiums are affected by this one-time payment, you can appeal the IRMAA surcharge using SSA Form SSA 44. These are your legal rights. Use them. The early claiming danger. Before I move to your action plan, I need to address one more thing. I have spoken to many seniors who are considering claiming Social Security early, retroactive, at age 62, because they are afraid the program will be cut or changed. I understand that fear. I genuinely do. But I need you to hear this clearly. Claiming at age 62 permanently reduces your benefit by up to 30%. That reduction does not go away when you turn 67. It stays with you for life. And it also reduces the survivor benefit your spouse may receive after you are gone. On the other hand, if you delay claiming past your full retirement age, your benefit grows by 8% for every year you wait, up to age 70. That is a guaranteed 8% annual return. You cannot get that anywhere else. Making a panicked decision based on proposals that have not even passed yet could cost you tens of thousands of dollars over your lifetime. Please, make this decision based on facts, not fear. All right, you now have the facts. Let me give you 3 clear steps you can take this week, right now, today. Step 1. Log in to your My Social Security account at ssa.gov and check your benefit statement. This is the most important step. Go to ssa.gov My Account. Create an account if you do not have one. It takes about 10 minutes. Once you are in, look at your benefit statement. Check your full earnings history. Make sure it is accurate. If you are a former teacher, firefighter, police officer, federal employee hired before 1984, or any state or local government worker, check whether your benefit has been recalculated to reflect the elimination of the WEP. If you are a spouse or survivor who was previously denied benefits or had them reduced under the GPO, check whether your benefit has been updated. If you do not see a change and you believe you qualify, do not wait for SSA to contact you. Call them directly at 1-800-772-1213 or visit your local SSA office in person. Some affected beneficiaries, particularly surviving spouses who were denied under GPO, may need to file or refile an application to start receiving their corrected benefit. Do not assume it is being handled automatically. Step 2. Review your tax situation for 2025, especially if you received a retroactive lump sum payment. Get a copy of your Form SSA 1099. SSA mails this in January. You can also access it through your My Social Security account online. Take that form to a tax professional, or at minimum, read IRS Publication 915 carefully. Ask specifically about the lump sum election method. This is a legal IRS tool that could significantly reduce your tax bill on the retroactive payment. Also, if you believe your Medicare premiums will be increased in 2027 because of this one-time payment, ask your tax professional about filing SSA Form SSA 44 to appeal the IRMAA surcharge. You have legal rights here, but you have to exercise them. Nobody will do it for you. Step 3. Do not make any major Social Security claiming decisions based on proposals that have not become law. If you are approaching age 62, 65, 67, or 70, do not let headlines about what the Senate might do push you into a premature decision. The Social Security 2100 Act is still in committee. It has not passed. The 2026 COLA has not been announced. No additional benefit increases beyond what has already been enacted are guaranteed. Here is what you should do instead. Go to SSA.gov and use the official retirement estimator tool. Run your numbers at ages 62, 67, and 70. See what the difference is for your specific situation. If you are married, run the survivor benefit calculations too. Your claiming decision affects your spouse's future income. And if you need personalized help, contact your State Health Insurance Assistance Program, also known as SHIP. It is free, it is unbiased, and it is available in every state through Medicare.gov, SHIP, or benefits.gov. Before I let you go, I need to say something important, something that I feel very strongly about. YouTube is a wonderful tool, and I am grateful you found this channel, but YouTube notifications are not reliable enough for the kind of information that directly affects your money, your benefits, and your retirement security. YouTube can choose not to show you a video. An algorithm can decide your notification is not a priority. And in the meantime, a deadline passes, a form goes unfiled, a benefit goes uncollected. That is not acceptable, which is why we have created the Global Senior Alerts official WhatsApp channel. This is a free, dedicated channel where we send you real-time alerts the moment anything important changes. New Social Security rules, COLA announcements, Medicare updates, pension law changes, IRS deadlines, banking regulations that affect seniors, travel rule changes from TSA. You will know before most people do. And when you join, you will receive a free download of our Senior Benefits Protection Guide. This guide walks you through every form you need to know, including the SSA 44, the SSA 1099 lump sum election, and the SSA appeal forms. The exact phone numbers and websites for SSA, Medicare, SHIP, and other official agencies. A plain language checklist you can go through with a family member to make sure nothing falls through the cracks. The link to join the WhatsApp channel is right below this video in the description. It takes about 30 seconds to join, and it could be the most important 30 seconds you spend this week. Now let me leave you with this. You worked hard for these benefits. You paid into the system for decades. You earned every dollar. The rules around Social Security are complicated. They change. They have hidden traps. And the system does not always make it easy to know when something has changed in your favor. That is exactly why I am here. My job, my entire purpose on this channel, is to make sure that you are never the last to know. You are not alone in this. Margaret, the retired teacher I told you about at the beginning of this video, she eventually found out about the Social Security Fairness Act. She contacted SSA. She filed the right paperwork. She got her corrected benefit, and she received her retroactive back pay. It took effort. It required knowing the right steps, but she got what she was owed. And so can you. If this video helped you, please share it with a friend, a neighbor, a family member, or anyone you know who is retired or approaching retirement. There are millions of people who need this information and have no idea where to find it. Be the person who passes it on. I will see you in the next video, and until then, stay informed, stay protected, and know your rights. I am Milena, and this channel exists for you.